Hi, I'm Lee Stone, and this is your UFXBank Week in Review. Let's begin the day by taking a look at the last week's risers and fallers. The euro had another strong week versus the dollar, tacking on another 2.1% to close the week at 137.78. The British pound, however, didn't fare as well versus the dollar. The pair finished the week virtually unchanged and closed on Friday at 158.32. The dollar fell against the yen in steady drops throughout the week, losing nearly 1.15% and last trading at 83.30. Reversing earlier gains on the week, the US-Canadian dollar pair fell over 1% on Thursday and Friday, last trading at 102, and closing the week down 0.5%. Oil made a huge jump this week, rising 6.65% to close at $81.58 a barrel. Gold had a more modest performance, gaining 1.7% on the week to close at just under $1,319 per ounce. In news this week, positive data out of the US and China helped bolster commodities linked to growth. Energy futures like gasoil and Nymex crude gained the most on this news, followed by metals such as copper, which reached a 26-month high on Friday. As expected, the U.S. House of Representatives voted in favor of measures that would allow importers to seek compensation from countries with disproportionately aligned exchange rates. The move was widely seen as an effort to pressure China to loosen restrictions on the yuan and allow the currency eventually to rise. The Senate has yet to vote on this matter. The last week marked a 20% increase for gold on the year, while silver continued its streak to its highest level since October 1980. The dollar fell against nearly every major currency this week and dropped to a 6-month low versus the euro. The impact will surely have an effect on this coming week's market activity, so let's bring in analyst Martin Smith to weigh in on this matter. Martin, how are you?
Hello, Lee.
So, Martin, what's happening with the dollar? I mean, can we expect a rebound?
Generally speaking, risk appetite is once again increasing, which is something we've talked about in the past. There are certainly other factors at play, but I would say the increase in positive data linked to growth has had the most significant influence on reactions in the Forex market. The chief region that this is coming out of course, is Asia, where central banks are selling increasing numbers of dollars back into the market. Right now, banks are favoring the euro, and so they're using those dollars to buy up the European currency. If there is a reversal in risk appetite, we may see a buyback, but it would have to be a pretty significant reversal to return the dollar to the same level it was. Do keep in mind that even though the dollar has dropped against almost every other cross pair in the last 3 months, the last month especially, its year-to-date versus the pound and euro is still in the green. Though how much longer that will hold up, of course, is another matter.
Now, what specifically has caused the rise in the euro over the last 2 weeks?
Well, we talked about risk appetite. When we talk about risk appetite, we're usually talking about increased production, or at least the assumption of increased production. Recent reports out of the US indicated an increase in consumer spending, and reports out of China are indicating an increase in production. And a general sentiment that we've avoided a double-dip recession, all these are playing into investor confidence for higher-yielding assets. We also have increasing reports that the Fed is likely to continue quantitative easing, which will further weaken the dollar, and is playing a significant part in the rise of the euro. In fact, the Faros Trading LLC predicted that the dollar will fall to 150 versus the euro by December. This would be its lowest level since 2009. Personally, I think that's a pretty bold statement to be making at this point, but we'll just have to wait and see. Obviously, if the euro continues at the recent pace we've been seeing, it will exceed those expectations. I just find this unlikely.
All right, let's move on to our Ask the Broker segment. Jonathan Bolton of Perth, Australia writes, after the Japanese government's intervention in the Forex market on September 15th and subsequent rise in the dollar-yen pair, the yen has been steadily climbing back up versus the dollar. What can we make of this?
Well, that's a good question. If you remember, before September 15th, we discussed how a lot of analysts and speculators believed that a Japanese effort, without the assistance of other nations, would be ineffective in the long run. This may be proof of that being the case. The dramatic decrease in the value of the dollar over the last 2 weeks would also be a significant factor. But the yen has almost completely regained its former position. Japan's Prime Minister, Naoto Kan, stated last week that he is willing to continue selling the yen to prevent it from strengthening versus the greenback. They spent, I think, $25 billion last month intervening in the Forex market, which I think shows some level of commitment. I'd say that we are likely to see another round of Japanese intervention in October. Whether or not that will hold is difficult to say.
Thank you, Martin. We hope you enjoyed our weekly review, and we hope you will join us next week. Until next time, be sure to visit us at UFXBank.com for simple, safe, and secure trading. Also, you can follow us on Twitter and Facebook. To submit your questions to our weekly broadcast, please email your questions to Martin Smith at askthebroker@UFXBank.com. For UFX Bank, I'm Lee Stone. Good luck and happy trading.